All right, so Bitcoin and Ethereum, they're in rally mode today, but the hits just keep coming in the world of cryptocurrency. I'm going to bring in now from Bitcoin Magazine, the head of market research, LeClair. And Dylan, I have to get your take on this BlockFi drama. The company recently valued at almost $5 billion, and now reportedly they're being sold to FTX for $25 million. I mean, that's obviously mind-boggling. What's going on here?
Yeah, so what essentially you have happening is a kind of a crypto native contagion event of balance sheet impairment, and that's just kind of spreading like a daisy chain across the industry. I think formally it was just announced that the deal with BlockFi and FTX actually came in at a $400 million credit line with an option to buy at $240 million. So a little bit less than, or a little bit more than what was reported yesterday, but still a huge markdown from the $5 billion that BlockFi raised at in 2021. And I think ultimately this is just proving that kind of the yields of these consumer-facing platforms that were presented as savings accounts to retail users, and that actually, these platforms were undergoing very risky arbitrage trading, taking a lot of risk that wasn't really quantifiable. And ultimately, kind of, it's all coming back to roost with these, balance sheet impairments and insolvency events.
Dylan, I got a less technical term for it. If it sounds too good to be true, maybe it is too good to be true. I mean, some of the interest rates they were offering were amazing.
Yeah, I mean, the risk-free interest rate on Bitcoin is 0%. Any other yield you get on your Bitcoin or other crypto assets is not really a yield. It's more of kind of you're selling that tail risk. You're kind of short this tail risk event where you lose everything. Unfortunately, users of, say, Celsius Network, which wasn't a network but rather a company, they halted withdrawals about 2 weeks ago. So, this is an event on counterparty risk. This is a lesson of not your keys, not your coins, and it's a tale of as old as time in crypto.
Hey, let me ask you then, what's going to happen like on the crypto borrowing lending side of the industry?
I mean, ultimately, over-collateralized lending, especially against Bitcoin, which, despite the volatile moves, is still a very liquid market. I mean, it trades 24/7, 365 in every jurisdiction on the planet. Over-collateralized Bitcoin borrowing and lending is actually not all that risky if the terms are advantageous, right? So you can over-collateralize 4-to-1, right? So you can withstand a 80% drawdown in that scenario. Ultimately, the real problem here was the rehypothecation of user deposits, the rehypothecation of coins. And then eventually when those and also the unsecured lending that took place in this industry. That's why we see this kind of, again, the daisy chain of defaults occurring. And, it's punishing the exchange rate.
It really is. Hey, I got less than a minute, but I do want to get this in because I saw where you tweeted, Lehman without a bailout, welcome to Bitcoin. What exactly does that mean?
Yeah, ultimately, this is kind of Bitcoin's Lehman moment, right? Where we have this contagion, balance sheets across the industry are getting absolutely wrecked. But ultimately, the beauty of Bitcoin is there is no lender of last resort, right? So all of this kind of malinvestment, all of this irresponsible debt is going to get liquidated. It's going to get purged, and Bitcoin will recover. A similar thing happened in March of 2020, where Bitcoin traded from 10,000 to 3,800 in a span of just a couple days, right? Ultimately, we know what happened and what followed, and the liquidation of this bad debt is ultimately a good thing in the long run.
I got to tell you, your work is fantastic. I appreciate you sharing your time with us. Happy 4th, Dylan. Appreciate it.
Thanks, Charles. Appreciate it.
So not all